Today, I will be discussing the landscape of the Malaysian bond market. Essentially, the bond market is a cornerstone of our financial system. It serves as a vital channel for the government and cooperation to raise capital for long-term nation-building projects. Over the years, Malaysia has developed a very mature market with stable instruments like Malaysian Government Security, which is the MGS, and Government Investment Issues, GII. Now, what actually moves this market? The biggest driver is the interest rate set by the BNM, which is the Bank Negara Malaysia. There is an inverse relationship here. When interest rates are expected to fall, existing bonds become more attractive because their fixed return are higher than what new bonds will offer. What's fascinating is that the market doesn't wait for an official announcement. As soon as there is a whisper or a prediction of a rate cut, investors rush to buy. This shows that the bond market is driven as much by expectation as it is by actual policy changes. If we look at our current environment, global tensions and slowing growth in major economies have made investors very sensitive. However, Malaysia has remained relatively resilient compared to our Asian neighbours, thanks to strong regional ties and economic initiative. In the article we selected, it highlights that bond yields in Malaysia have declined across the board. This happened because investors began pricing in a potential rate reduction by BNM. This reaction proved just how close our local bond market is linked to both domestic signals and global economic shift.
Hi, my name is Watisha binti Zulkifli and I will talk about the issue in the article. This article highlights three main factors affecting Malaysia bond market. First, yields on Malaysia government security and government investment issue have declined across all maturities. This shows strong demand from investors who are willing to accept lower return in exchange for safety and stability. Second, expectation of a possible interest rate cut by Bank Negara Malaysia have pushed bond yields lower. Global economic uncertainty and trade tension have increased expectation of monetary easing. Finally, Malaysia bond market remains strong due to solid domestic fundamentals, strong regional trade ties and developments such as Johor-Singapore Special Economic Zone have improved investor confidence in Malaysia's long-term economic outlook.
Policymakers such as Bank Negara Malaysia and the Ministry of Finance should clearly communicate monetary and fiscal policy. Clear guidance on interest rate, government borrowing and debt sustainability help investors understand the future direction. This reduces uncertainty, stabilize bond yield and maintain strong demand for MGS and GII even during global economy uncertainty. Malaysia should further develop its bond market by attracting the more diverse investor and expanding both Islamic and conventional debt instruments. Introducing longer tenor bond, green sukuk and sustainability linked sukuk as well as improving foreign investor access can enhance market liquidity. This reduces over-dependence on short-term interest rate movement and support long-term sustainable economic development.
To strengthen Malaysian bond market, policymakers should continue improve economic fundamentals and deepening regional and global economic integration. Investment strategic projects such as the Johor-Singapore Special Economic Zone and improvement in trade agreement like Australia-New Zealand Free Area can enhance Malaysia's attractiveness to investors. At the same time, maintain fiscal discipline in government debt issuance is essential to preserve market confidence. In addition, authorities must closely monitor global monetary development, particularly changes in US Federal Reserve policy. Potential interest rate cuts in advanced economy may increase capital inflow into emerging markets, including Malaysia. Therefore, Bank Negara Malaysia should ensure adequate liquidity in the financial system. A deep and well-diversified local bond market with a balanced investor base will enable Malaysia to benefit from global trends while remaining resilient to external shocks.
Hello, my name is Sofia Maisara binti Badul Hisam. So I will conclude this presentation. What can we say about Malaysia's bond market? Even before Bank Negara actually cut the interest rate, just the expectation of a rate cut was already enough to move the bond market. Investors rush to buy bond, so demand for bond and price will increase. On top of that, Malaysia's economy still seen as stable compared to other countries. With global uncertainty and worries about the US economy, investors feel safer put their money in Malaysian government bond. In short, the bond market is not only react to real action but also to what investors think will happen next. This shows that expectations, confidence, and global conditions play a big role in the bond market.